So I'm hearing tons of folks discussing the stock market giving out once in a lifetime opportunities, but unfortunately, it's not actually true. Yes, there's some huge opportunities right now, and yes, I'm buying certain stocks right now too. But the vast majority of the stocks that I've seen discussed as once in a lifetime opportunities are simply not once in a lifetime opportunities. So have you fallen for this narrative already with some stocks? Well, let's kind of clear all this up and discuss those stocks specifically right after you like this video. If you like, not getting the hype train or getting the best ever or the worst ever, but just basically straight information. All right, so I know sometimes people get a little bit sensitive about this topic, and that's okay. We need to be able to understand and identify what is a once in a lifetime opportunity and what is not a once in a lifetime opportunity, and exactly where a ton of stocks that are being discussed right now today kind of fit in that narrative overall. And I actually put out this video to my group where we discuss these exact stocks, exactly what constitutes, a great once in a lifetime opportunity, what's overvalued, what's undervalued, and a ton of stuff like that. We discuss a lot of different stocks. So I'm going to play that for you guys here now because I think you guys are going to get a lot of value out of it. All right, guys, I actually think this is a vital concept that we're going to talk about today because I don't know, it's just getting wild out there in the market in a completely different direction. So let me be clear. Yes, I am really, really, really excited to finally be able to start buying some good deals again. It's been, you guys have, stuck around here in the group. It's been 9 months, and outside of January, February timeframe, it's been slim pickings in regards to buying stocks. But let me be clear about this point in regards to a lot of the old man style, a lot of these dividend stocks, all these stock buys that you're seeing here lately from me, I am buying because they're simply at fair value. So these are fair value buys. These are not stupid, crazy discounts. This isn't once in a lifetime opportunity. This isn't generational opportunity. Just any of the other crazy narratives out there. That's not what it is. This is, I'm simply buying these stocks because they've finally fallen back to fair value, and that's it. And this is the reason why, conceptually, I want everybody to understand why I preach it so much. Valuation matters the most out of anything else that you do in life in regards to investing, because a 70% drop in a stock does not mean it's a steal deal. It just doesn't. And let me give you a perfect example here. Meta last year at 70+% off was a steal deal, once in a lifetime type deal. That absolutely was. However, on the opposite end of the spectrum, Tattooed Chef being 75% off or whatever, or 90% off, 95% off was not a steal deal. And I can do the same exact thing. I know those are two extremes. So let's look at a stock like Palantir. At the time when Palantir was valued at $40 right there as soon as it went public, it was not even close to a $40 stock. It was not even really, I could make a case maybe for it being a $10 stock, but not really. So even a 75% drop in that stock from that price still meant I could make a good case that it was still overvalued at this stage because they hadn't proven anything yet as a public company. And more importantly, when you looked at their earnings, there were some positives, but there was a lot of negatives too. So 75% off at that time was still not a steal deal once in a lifetime. And of course, we saw that it fell almost all the way down to $5, at some point in time there, it got cut in half again. Now, if somebody wants to kind of point out the fact that, hey, dividend stocks, these old man style stocks, whatever, these great long-term, value type stocks hardly ever have these sort of 30% moves in them, especially within a year. That rarely happens. And with that, I agree. It is rare to see these sorts of stocks. And I know we're so used to last year, where you get like a 75% whiplash in a stock like Meta. I know. We got to get that out of our heads though. These type stocks, these dividend style stocks, don't normally move up or down 30% like that in a year, half a year, whatever the case is. But that doesn't mean that they're still not overvalued, because they also rarely, if ever, get as overvalued as they were last year. So, whenever you have kind of an anomaly event up, it also means the anomaly event down to get back to fair value is going to be larger than normal. And let me just kind of illustrate how overvalued they were last year. Last year, when Coke was right around upper 30s PE or so, well above what it normally trades at, Meta was at an 8 or a 9 PE. That's how out of whack everything was. And that's why you saw such a huge move, 4 or 5x move in Meta, or I guess 4x now, move in Meta up, and why you've seen a 30% dive in Coke during that time frame, or during the intermittent time frame here. That's why, because Coke was significantly overvalued and Meta was stupidly ridiculous. I would call that one once in a lifetime type undervalued. Right now, we are getting a little bit of a discount on Coke, but it's not crazy. It's not out of the ordinary. It's not once in a lifetime. Coke has traded cheaper before. So, Coke being at a 23 PE, I think is what it is right now, 23, 24, and Meta being at a 33, 34, 35, right up in that range right there, that's probably about normal. That's about average. That's about where both those stocks should be. Not crazy overvalued or undervalued, just right around fair value for both of those stocks. Right in that range of fair value for both of those stocks is exactly where we're at. Now, I agree. You can look at a stock like Walgreens and say, that one is significantly undervalued from its historicals. I agree there completely. But the reason why it's there is not necessarily because Wall Street got stupid. It's because they're struggling. They're having business problems right now. And they're obviously in transition as well with the CEO being ousted. So that right there is the reason for that significantly undervalued beat. And there's no guarantee that it won't reset to a new multiple or anything else like that. There's risk involved with that. That's why it's beaten down more. But I've seen a lot of videos. You guys have sent them to me. You guys have asked me a lot of questions in my DMs in regards to, oh my gosh, this is just crazy that we're getting these crazy deals and Coke and, possibly General Mills. And you notice I haven't bought General Mills yet, even though it's on my list, because I still think it's a little bit overvalued, getting much closer than it was last year or the beginning of this year to fair value, but it's not all the way there yet, in my opinion, of course. And so I'm being patient and I'm waiting. And I think I'm going to get more and more opportunities in a lot of these stocks as the year goes on. But to act like this is just some crazy abnormal market in regards to, dividend style stocks and old man style stocks finally coming back down to fair value, they're not. They're just basically back to where they should be in the first place and where they typically trade at. And again, yeah, I know it's had a big fall down and a 30% move down. As I'm sure you can go back through the history and just see outside of when they were actual growth stocks back in the day, since they kind of became dividend stalwarts moving forward, probably hadn't been too many 30% moves in a lot of these stocks. I would agree there. But I would also say there's very few times where they traded as rich as they did last year for a sustained period of time. So I'm not saying don't buy these stocks because they're at fair value. I'm not saying don't do your own valuation, come to your own conclusion, but I know in terms of valuation, and this is why I do it, and the reason why I don't listen to anything else that's out there is because stocks naturally return there. That's how come I remember when I started talking about dividend stocks and whenever I, kind of placed my price targets out there for a lot of these stocks, I got a lot of DMs like, hey, are you sure it's ever going to get back down to that price? I mean, gosh, that seems really, really cheap. And the answer was, I'm just going by the historical valuation of the stock and assuming that it will return back to fair value. Now, it's always possible that for whatever reason, people just decided to keep Coke at a 40 PE ratio for the rest of its life or 35 PE ratio for the rest of its life. It's possible, but highly unlikely. I knew it would fall much more further down, back down into more of that fair value territory at some point in time. Now, of course, that also means if they continue to falter, we're going to start getting into that, hey, this is undervalued. And then maybe at some point in time in the future, we will hit on some of those stocks. Hey, this is wow. You may not see this price again. It takes something like, the financial crisis to get this sort of pricing, and we're getting it right now. That would be awesome. I hope that we get that. But for right now, starting my modified DCA right there at fair value, and if it continues to falter down lower, I will continue to add heavier and heavier and heavier until I build out those positions on the way down. Am I going to guess the bottom? Absolutely not. Probably not even going to be close in any of them. And I don't care. And some of the shares, I might have to overpay a little bit for it in order to fill out the rest of my position. But this to me is a 3 to 5 year game. I'm not even looking at these stocks or taking any of the money out or anything else like that for years into the future there. Because again, for me, for my goal for this particular portfolio, it's a income pillar. And that's it. That's my gearing. That's what I'm gearing it towards. And I have time to get there because I don't need the income right now. So obviously you guys all may be in a different scenario. Make sure you're following your plan. But it's something I just wanted to address because I just was like, oh my gosh, this is not once in a lifetime. I don't know. It was just a lot of things out there and such. Great opportunity. I would agree. It's been some time since we've had an opportunity to buy these stocks at a fair valuation because they've been overvalued for so long. But it's not unusual over the course of a 20, 30, 40-year horizon to see these stocks in just fair value territory. Honestly, that's where it trades most of the time in general. So anyways, I just kind of want to get this out to you guys. Make sure we kind of, again, keep the noise out, regardless of whether it works in our favor or not. Sometimes people are overzealous with these type things. I know it gets clicks and likes and all that sort of stuff. I understand that completely, but I just kind of wanted to make sure we're all kind of tempering our expectations and understanding where we're at in the market right now, where some of these stocks are finally just hitting fair value. We're not into crazy undervalued territory yet on a lot of these stocks. So kind of keep that in mind as you move forward. And remember, if you want access to videos just like that, a library of several hundred different videos, and you want my complete watch list, complete with price targets, you want to see all my buy and sell alerts in real time, you want to take 5 courses for free, use our stock analyzer tool for free, be a part of the best 6, 7, and 8-figure Discord out there. And there's so many things coming, guys. You really don't want to miss out. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.